Hi, I'm Don Mecoy. I'm a reporter with the Oklahoman, and I'm joined today by Nick Massey. Nick is an investment manager with Householder Finance in Edmond. He's also been a contributor at CNBC and Bloomberg, and we've seen him here at News OK before. Thanks for joining us today, Nick.
You're welcome. Glad to be here.
And I thought we'd talk about the markets today. You know, 13 months ago, the Dow was about 14,000. Currently, it's at about 8,500 or so. Earlier this week, it dipped below 8,000 briefly. How low can the Dow go?
Oh, well, that's the question everybody asked. If we knew that for sure, we'd all be rich. But we came down to the 8,000 area a few weeks ago in the big panic in October, and risen up a few times since then. Very, very volatile. And then on Wednesday, I guess it was Wednesday, I lose track. We came down yesterday we came down, tested the 8,000 area. There was fear that it might break down from there. It didn't, and we had a big reversal and up 550 points, as you know. We're really kind of stuck in a trading range right now between maybe 8,000 on the Dow up to about 9,300 on the upside. Answer your question, there's some fear that if we go back and test 8,000 again and break it, next stop is kind of about 7,000, 7,200. I hope we don't have to find out whether that's really going to happen or not, but there's some small chance that could be if we break down.
But you also think that there's a chance that it could break through the top end of that trading level and move on upwards.
Right.
As well.
I think the fundamentals now are pointing to a likelihood that the markets will start looking at a recovery maybe third or fourth quarter of next year, that they've probably built in a lot of the anticipation of the recession that we're in. And as long as it doesn't get worse or get longer or deeper, trying to find a bottom in this area. And if that's the case, we may have seen the lows. If we can break out of the top side of this range, out of the 9,300, then I think between now and spring we could see 10, 11,000 on the Dow on a recovery.
Well, now I'm a person, I'm continuing to pump money into my 401k, which is withering away. And for those of us who've stayed invested and sort of borne some of this pain already, what should we be doing right now?
Well, if you're still invested, then there's really nothing to do at this point. Probably the absolute worst thing you could do at this point would be to try to sell and get out here, because in all likelihood, if we're not at a bottom, we're getting fairly close to it. And unless you're a pretty nimble trader to get out and jump back in, which we don't recommend for most people, the worst has probably happened, and you should just kind of tighten up the belt and hang on.
Well, now, I know some people have bailed out. They're no longer in the market. They've reduced their exposure to stocks. What should these people be doing and looking for?
Well, we do think we're going to have a rally and that people should be invested. Now, the people who are very, very cautious might just stay in cash and sit back. And if we did break down and drop as low as 7,000, which, like I said, I don't think is highly likely, but certainly possible, that would be a place to jump all over it. But the chance of doing that is pretty small for most people. But I would say I think you need to be invested. If you're in cash, start investing a little bit now, maybe 20-25% of it, and if we get another drop, you can add to it, and that way you're kind of averaging down. At the same token, if we get a big reversal and sort of break out of the upside, you'll be buying on the way up, which is not as much fun as buying the bottom, but it's at least a safer way to go.
Now, there's so much fear, I think, among investors and people who have watched their retirement savings or college savings deteriorate. Is there a potential that the Dow could really break down and go down to 5,000 or even less than that?
Oh, well, I guess all things are possible, but in order to get down to that level, I mean, there's talk now of being in a recession, and I think clearly we are, and we're about to hit the official definition of it. But we've discounted a recession that's just about as bad, if not worse, than any recession we've had since the Great Depression. To go down to 5,000 at this point, I would think we'd have to see the economy and fear for the economy of actually going into a full-blown depression. And I don't know of anybody that's really predicting that at this point.
Okay. Well, it's good to get your advice, and that makes me feel a little better. I appreciate it. And thanks for coming in.
You bet.
If you want to see more coverage, obviously we'll have a lot here at News OK and in the pages of the Oklahoman. Thank you.